You never short in a bull market. But in a bear market, you better believe you short. And that's what's going to happen. So, I mean, what happened in the Tesla right before this changeover is that you had a lot of people that were short markets. And what happened was they were all short, and then the results came in, and it showed that they were gonna make their money. Well, those people had to buy back at a high. Believe it or not, the times have changed. I mean, now everybody is trying to get out of stuff. So you just don't want to be in a position of being long right now. I mean, we're in it goes in a transition. It goes from a bull market to a bear market, and there's these situations right in between, and that's where we are now. And so right now, cash is king. Stay in cash or get into cash, even though you may see, I'm constantly on the phone outside of this with people that have had 10% losses. Well, think of it this way: the most important thing to preserve right now is your capital, because even with reduced capital, when the market turns to a bear market, the opportunities to make money in this market are going to be tremendous, because what happens is that markets tend to go down. And if you have cash, you can't if you don't. Now here's the bad thing about shorting stocks is that if you have a regular, like an IRA or anything like that, you can't short stocks. But if you have a level 3 authorization on your accounts, like you can get with TD Ameritrade, you can. And there's always plenty of stocks to shorts. So does it much teach you about options? Not really. There's other really good books about options. The one I would recommend is by God, and I should have brought it with me today. It's just Google blue collar investor, and it's Ellman is the name. It's a great book on options. I recommend starting not with all these very fancy ones like butterflies and all that stuff. And those are all great. I recommend starting with covered calls and cash secured puts. Probably in this market we're coming into cash secured puts are the way to go, and not not the other option strategies, to be honest with you. But there is it's available on Amazon. It's Alan Ellman is the guy's name. Alan Ellman. He has written great stuff about options, especially covered calls and cash secured puts. That's where you ought to look to see. Market here, I think possibly the covered call strategies that I was employing, and I've been employing for a long time, probably not the best. Probably the cash secured puts where they want to be. Also, and then shorting stocks. So really, when something like this happens, really all you can do in a declining market, in a bear market, there's really only two kind of positions you can be in. One of them is an all in cash. Well, you don't make any money if you're all in cash, right? Second is to be to actively short stocks. We're not ready to do that yet. Now, there's a third option, and that's kind of what I was recommending a few days ago, and things change as things move. It's moving fast. Are these bear ETFs? But the problem with the bear ETFs is once everyone discovers these bear ETFs, like they're doing right now, they'll just plow into them, and you're going to see them reverse, and so you might not be able to make money there. If you've made money in the bear ETFs but these bear ETFs are all about change. So if there is rapid directional change, then that's when they go up. If there's not, they don't, and they can potentially reverse and go down, because invariably what's going to happen is we're going to get, there's going to be a news story that's going to come out. There's going to be a glimmer of hope. Everyone is saying, oh, well, the crisis is over with. They go back in the market. It goes up. The SQQQ and the TVIX all go down because it's a time to just let the big boys duke it out. Let them duke it out. Let them let them kill each other in there, because there's just going to be a lot of stuff. TD Ameritrade definitely does have absolutely. One of the things great about TD Ameritrade, and if you're looking to get back into the market after losing money, unfortunately, is that they do have paper trading, and I think that's very, very good, because basically what it allows you to do is it allows you to get an account. Allows you to trade the account sort of as if, and try out some ideas and see how they work. And that's really, really good. And I highly, highly recommend them. I've used them for years. I have been with TD Ameritrade before it was even TD Ameritrade, when it was a company called Waterhouse Securities, believe it or not, years ago. And then they were absorbed by Toronto Dominion, and then, Ameritrade. And now TD Ameritrade has been bought by Charles Schwab. So they definitely have the liquidity. They definitely have the backing. That's the biggest problem with Robinhood. Though I really I have to say, I like the Robinhood interface. You don't have the specialists that will come in and give you a sell. That's what was happening in Robinhood. That's why it was shut down. It's because people were going in, they're all trying to sell at the same time. They didn't have specialist coverage, and they got no bid, and so they went offline, and they're probably going to get fined for that by the FINRA, the regulatory agency. But whatever. Robinhood is much better. Okay, that's probably true. That's probably true. But you know what? Robinhood isn't well enough capitalized. They just aren't, and you can tell, and you can see it in this downturn, Derek, to get to Citadel, which is where everything is traded. So that's just my opinion, and it's probably not well founded. I mean, I don't have any evidence of that, but basically, when times get tough, there's tiering of orders. You get the big boys, and they have, like the Interactive Brokers and the TD Ameritrades and the Charles Schwabs of the world get the bite of the apple, and everyone else just basically gets crumbs. So that's just sort of how it is. And it doesn't really it doesn't really, unfortunately, it doesn't really matter, and that sucks, because you have something that you want to sell, you can't get a fill. The reason that you get a fill in these market corrections is because there's specialists that they pay big money to come in and take those positions until they can get a fill, and aggregate those positions. And those positions typically trade all through Chicago, not through New York. They trade through this company, Citadel. I know you never heard of them. I keep talking about them, but basically that's where the real market is. It's not the floor of the exchange. It's not, it's not the CBOT. It is this thing called Citadel, and it's not the only one. There's some other ones as well. There's the BATS, which is in Kansas City, that handles a lot of traffic too. These are the, Archipelago. These are the ones. These are basically the level 2 trade, the level 2 exchanges that are off the exchange. They're what some people call, I think that's a bad name for it, but it's just basically institutional clearing, and they don't really come into play until you can't get a bid, like in this market. So that's the way it is. Anyways, any questions? Let me see if I have any questions out there that possibly can answer. Yeah. Okay. Yeah, they're about to close the trading floor. Yes, they are, but okay. SQQQ still a hold. On the SQ, if you've made money in the SQQQ, I'd look to see what my basis is. What I mean by basis is the amount of money that you originally invested, and I would sell up to that point. I would sell as much to take out that basis, and I would continue to trade the SQQQ with the profit only. But that's just my opinion. Hey, Bobby on the talk. Awesome. Glad you were able to make some money on the SQQQ. Yeah, nerve-wracking. Exactly. Exactly. I made some money on the SQQQ. I consider myself lucky. I sold. That's great, man. I'm so happy that you did. I'm so happy that, man, these markets can be really hard to do. This is why when you get into these bad patches, don't try to trade a lot of positions. Only try to trade maybe maximum number of positions I trade at any one time is 8, and usually it's less than that. Usually I'm trading 4 or 5. Just don't, this is not a trading market right now. I mean, here I am saying this for the first time in a long time, but it's just not a trading market. Just get into cash. I keep reiterating that, but this is the time, because there's gonna be opportunities. Yeah, should we already be shorting? Not yet. No, we shouldn't be shorting yet, but we're gonna be shorting. Okay, we're gonna be. So this is Central Coast Cam. We shouldn't be shorting yet. So I really appreciate that. Okay, that. Oh, by the way, on the basic primer that I recommend for options is, here's the problem with most options books. They're very technical, and they're written by theoreticians, and they really don't work. But there is a book out there that I really like. It's any of the books by Alan Ellman. You want to read those because they're easy to digest. They're about making money and not necessarily getting a PhD. So I really appreciate those books, and I highly recommend them. And it's on Amazon. What time should I sell my SQQQ? I'm up roughly 25%. Excellent. I think that you should sell now, and here's why. This is an IBD rule. When you're up 25% on anything, 20 to 25%, it's probably going to roll over. At the very minimum, I would sell out my capital. This is Central Coast. I would sell out my capital, and then I would. I made a little bit of money. I didn't stay in as long as I probably should have. But the fact that you have 25%, that's killer. I just think it can reverse on you, and you could see that evaporate very quickly. Unfortunately, or fortunately, I mean, you've done great on SQQ. So take the money and run. right now. Take the money and run. Get ready. We're going to be in this transition period probably for 2 or 3 weeks, and then 2 or 3. You know, there's. I mean, everybody is going to be very afraid in the next few weeks, and you're going to hear all kinds of dire stuff. But or set a stop loss. Yes, that's another way to play it. Bobby. Totally. Set that stop loss really tight, maybe 5% down. That's a good way to play it. That's a good way to play it. I actually prefer that rather than going naked here, because the markets can change so quickly. And if you have a stop loss in there, and this is also tactical in really volatile markets, if you have a stop loss in there, it's in the system and it'll be automatically triggered. If you try to input a stop or a market order when it's really volatile, you may not get a fill because you may not be able to get to the book quick enough. This is what I'm talking about, Citadel. If you put a stop loss in, you're gonna be taken out at the right price more than likely, but you may not at a market order. I know that sounds weird, but it's true. Set it tight, stop tight. Definitely be tight on your stop losses. This is just, in a situation like this, it's does it trigger another hour? Yes. We may get another gap down on the market. I was watching the open this morning, and I mean, we were already at the first trigger, and this doesn't happen. I mean, this literally doesn't happen. And before this week, I think this happened. I don't know. It really never really happened. I mean, I think it happened once or twice in '87. So this is kind of historic. So I think that we may get another one in the next hour. There's a lot of panic selling going on right now. Here's what I'm waiting, and here's why I don't think it's a good time to trade it either side. Because I think there's going to be a lot of panic selling. There's going to be a relief rally after all of these sales get taken out on everything, the whole market. And then there's going to be this relief rally. And this relief rally will happen probably about 2 or 3 weeks from now. And it'll be going up, and it'll go up massively, and everybody will say, wow, it's over with, no problem. And then when it gets all the way up there and everybody's so excited, that's when you short, because it's going to come down even further. The valuations are just too high, and that's what the market's telling us. I mean, if we have this coronavirus thing going on where, the NBA is shutting down and travel is shutting down, you know what? A lot of companies aren't going to be able to make their payroll do that. But I just wouldn't do it in this market. I don't think it right now. It's not time to short, and it's really, if you're in the SQQQ now, take your profits. I mean, only risk your profits. If you're not in the SQQQ, I don't think it's a good time right now. But hey, yeah. See, the market dropping. It was crazy this morning. Absolutely. You know why it was so crazy? Because everybody put in their orders overnight. So, yeah. Anyways, shout out to Bobby on the talk. You're thinking's good on that. I mean, I definitely think the SQQQ is. I mean, that's my preferred way of shorting the market. But right now, if you're not in it right now, I wouldn't be in it. If you got profit, take your profit. I set this off. Cool. Okay. Excellent. Just preserve your capital, because here's the thing about the SQQQ. It's going to go down and then it's going to reverse, and you just don't know on it right now. It's better to kind of get a directional feel for the direction. And I've pretty much halted all my trading, at least for a few days, until I can kind of get a direction. But if you're in those at a profit, hey man, who am I to say not to profit? You always want to do that. You always want to do that. I think it's awesome that you're in it. Again, I'm out of the SQQQ, but I definitely made some money on it. So, and I was in it basically. I was in it on Friday last week. I'm on that. Again, just here's the thing. Everyone in the media is going to tell you that the sky is falling, and it's not. So just get in cash and wait. There's going to be some awesome stuff. Yeah, if it climbs over, yeah, exactly. To take maximum profits. This is a really, by the way, another shout out to Bobby on the talk. This is absolutely correct. This is the correct way to play it. If you're in it and you move the stop loss up, giving about a 5% gap off to where it's sort of trading, and then when it falls, you will take the maximum profit. I think that's very, very, very good. I think that's very good. That's how I played Tesla recently. I couldn't have done better by doing that. I mean, anything else. So that is the way to play it. That if you have a winner and it's moving up, you want to set that stop loss. Even if it crashes through it, you're going to make the profit. And in a market like this, market orders are filled after stop losses. So stop losses rule in this market. You do not want to manually sell in this market because you may not get a fill. And that's exactly what happened to all the people at TikTok. Not TikTok, at Robinhood. They didn't get fills, and it sucks. I mean, it sucks. So, all right. Well, what am I doing currently? Just to give you an idea of what I'm doing, I have sold out all my positions. I am totally in cash. As a matter of fact, I'm doing very well in cash. As a matter of fact, a gentleman came to my office yesterday with a $15,000 Rolex that I bought for a lot less than that. So cash is king right now. You can make some deals. All right. Will stop losses fill after our trading? No, it will not. It will only fill during actual trading hours. After our trading, it won't fill in that, and it won't fill them. So, and that's a really good question, because you think, wow, after hours the stock has come down or it's come up or whatever. Well, in the after hours, it won't fill, only during normal trading hours. So there is an option. There is an option that you can. I bought Tesla at 731. Should I sell it now? Yes, because it will probably go. It will go higher eventually. Protect your situation. I was out of Tesla. I bought Tesla at 702. I was out at 680 because I had a stop loss. It was sucked. But and this was recently. This is recent. This is like as of Monday. So if you're at 731 right now, I think Tesla, long term, I think Tesla is an awesome company, and I will say that right here. But protect your downside. There's going to be a lot of panic selling in Tesla. Unfortunately, it may go down. It may go down. Now, the key levels for Tesla are about 420, and the real key level is 361. If it breaks through 361, it's probably going to go a lot lower. Tesla's at 552. Thanks a lot. Thanks a lot. I appreciate, because I'm not actually watching the screen right now, so that's 552. Okay, if it's at 552, I wouldn't wait for the bounce on this one. Here's the thing: you can sell now and come back in later when it goes when it goes the opposite direction. Just don't hold it, because your thoughts on Microsoft. Okay, I was talking with Long this morning on this, and I held Microsoft too. I had Microsoft. I sold out. I always set my stop limit. I wouldn't buy Microsoft at this price. Is it worth it at this price? You better believe it is. But the market is weird right now. The market is saying sell everything. You don't want to be caught. You don't want to be catching a falling knife. That's the thing they always say. Don't try to catch a falling knife. Well, that's on Disney. Same thing with Disney. Disney's trading, I think, of about 102 right now. It was this morning. I looked at it. Disney is a super duper company, and they've got great stuff. Do I want to be holding it? No, not now, because I think it's going to go below 90. Below 90, but wait. And it may, I sold it, yeah, at 146, 9% loss. And this is correct, by the way, everyone. I just want to point out what Long Nguyen is saying here, and he's totally right. I mean, at 140 lower, and there's going to be a chance to buy it again. It's like you want to maximize the waves up, and you want to minimize the waves down. We're in a wave down, and that's the market gets weird. And okay, it's about 92. Okay, so yeah, so then it's already yeah, Disney's already 92. It's if it's 92, it's going to bounce. Wait for it to bounce, and don't buy it, and wait. And it may be a short again, but in 2 or 3 weeks, which stocks are in your radar? Okay, I'm one of the ones I'm looking at. What do you think about in Nugget? Is that? Let me just check a look at that. I'm not familiar. Is that the NUGT? Okay. Is that the gold? Is that a gambling stock? I'm just trying to think. No. Okay. No. I'm sorry. It's Gold Miners 3X Bear. Okay. That's okay. I didn't know what that is. I love Draxion's products. I think they're really good. But okay, and look, you see it's down and the volume's up. Okay, now this is the paradox. This is something that you need to kind of understand. Everybody thinks that in tough times, gold is the place to be. It is not. It is not, because gold and oil trade in tandem. Oil's gone down. Gold will come down. This is going to be for the 10-year bond, is because today, if you hold cash, the value, buying power of your cash is appreciating, not depreciating. For most of your life, and most of my life, every month you hold cash, it gets less value. Well, that's not the case. Now it's getting more valuable. So you want to hold cash right now. I wouldn't buy this. I like the bear ETFs, but this isn't the one. Okay, this is a bull. This is a bull fund. Don't even if it's got the word bull on it right now. Don't even think about it. Just that's the way. Okay, the gold miner ETF. No, no, just the gold. The gold miners are going to get killed. The best of the best in the gold miners is probably KL. And let me take a look at where KL is. KL actually was on the IBD 50, so it's a it's a good one. It's Kirkland Lake Gold. It's basically a Canadian company that does a lot of mining in Australia, and with South Africa offline, it's probably a good one. Yeah, it's down. See, there you go, and it's gap down too. So even the gold miners, just stay out, just stay out of them. Just stay out of them right now. Get into cash. Inflammation has been at 1 to 1.5. Okay. Oh, inflation. Yeah. Yeah. Exactly. 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 Inflation is incredibly low right now. Even that, I'd be suspect. I think that your money is going to actually buy more going forward. As strange as that sounds, I mean, it's just going to be weird, especially because of the drop in the price of oil. Is Walmart stock good? No, and the reason Walmart probably is not a good stock is because I think you're going to see that sales are going to go down for Walmart because people just aren't going to come to the stores. Now, they're going to really go down for the restaurant sector, but they're going to go down probably for Walmart too. So, not oil stocks, get in now, or wait. Like the CVI. Let me just take a look at the CVI. Yeah, stay out right now. I just think it's prudent. I'm not saying, stay. Okay, yeah, CVI Energy, $15. Let me look at the you do not want to buy CVI. This thing is on a power dive. This thing is like, yeah, this chart looks like Egypt Air flight when they flew into the ocean. This, yeah, no. If you're not in this thing, if you're in this thing right now, pull the ripcord and pull it hard, because this puppy is going into the ocean. That's all I can. ExxonMobil, no. God, I tell you, I'm saying no on everything. I'm not a no kind of guy, but ExxonMobil is a great company. It will survive this. It's not time to buy it now, but this thing is a buy when the thing comes up off the floor. It's not there yet. It's at 38. Wow. ExxonMobil is since I've been around, it's down 8.7 days. Its volume is up 135. This is the old adage: do not try to catch a fall. No, Bitcoin. No, I don't know if you've seen the Bitcoin results this morning, but there's liquidity issues in the Bitcoin market. People cannot get fills, so not too bad. Too bad my sell trigger hit on SQQQ. Okay, well, hey, think about it though. Think about it. I know that it sucks. It sucks that your sell trigger hit, which I think is you did it right. You know, seem nice to still be in or sell it because there's going to be an opportunity. Just get into cash, build your cash position. But if you've got profit in the SQQQ, you did good, man. You did good. Coca-Cola, KO, no. Netflix, no. I'm just not. I can take a look real quick. Going over here to Wayfarer. Wayfarer. Symbol W. It's not one I'm normally trading. Great company. company. They have some seriously good stuff. Yeah, it's off tremendously. Yeah. Look at that thing. It's down $8.26. The chart looks horrible. Yeah, it started to move. It started to move in the wrong direction about July 16th. Yeah, this is they're too dependent on the Chinese market. Wayfair may have a lot of trouble getting supply. Not one to be in right now. It is an online retailer, but the online retailer that's probably going to do the best, and unfortunately, or fortunately, look at this Amazon. I mean, I think it is, but even Amazon may not be so great for a quarter or two. So, in your opinion, the stock market should go down more? Absolutely. What do you recommend then, really? And this is I'm just trying to give you the real answer here, and not sugarcoating, because I don't have any access to grind. I don't manage anybody else's money but my own. I'm telling you what I'm doing. I've raised a few $100,000 in cash, and I'm going to be able to make some serious money. You don't necessarily have to be like I am, but that's what I'm doing with mine. Just telling you. Always go to cash and worry about the could have been. Absolutely. Hey, everybody out there. This Names Dips